This is the futures levels update for Wednesday night. Don't forget to like the video and discuss the topics in the comment section. Where is the candid camera? This is my third recording of the same video. Don't ask. Okay, this time will work. All right, so this is the ES E-minis. Before I forget, please like this video. I worked so hard for it, and discuss the comments in the section. Discuss the contents in the comments section. All right, here we go. Today's action was wild. We had an incredible rally, which may have taken a lot of steam out of the buyers, and we have an even stronger fall, which also may have exhausted the sellers. So they might be quiet tonight. So we might get a bounce in the ES and the NQ. There might be some positive patterns brewing, like a descending wedge late in the day. So the way to trade it, I want you to be aware that I think that if we get a rally without any new catalyst, new quote news coming out to help the buyers, we're going to hit sellers. The sellers will show up at 45.72-ish. More on that. So let me see if we can make a trade out of it. If you guess up or down, you're guessing, in my opinion. But here's what we can use. If we rally, we're going to hit level sellers and volume sellers. So I think the buyers don't have enough to push through them again. So any rally will probably fade at 45.72. If I don't want to guess what will happen next, I should wait for the rally and then fade it. So the trade then will become to trade it down. From wherever level I deem I've had enough. I think the sellers will start showing up from 69, 45, 68, 69, but will be heavily intensifying the closer you get to 72, 73. All right, so the trade would be down. So whether you want to test them all the way down to the low or not, that's up to you. Depends on what profit targets one might have. There will be support on the way down at 45.60, I'm sorry. 45.62 has been very significant for the last 3 days. So keep that in mind, heavy volume area. If we lose the lows that we just placed at 45.56, 55, we might end up at 45.48, 46. So if we get target 1 done after a little rally, we might get target 2. And if we don't get target 1, we might get target 2 anyway. So I can see the argument for going long or short. NQ's story is similar, but not quite exact. Not quite exactly the same. So this one also could see a bounce that will hit sellers right away. There are tons of sellers at 16,075. Volume, actually 60 to 75. Volume sellers. So what am I saying? This looks like an enticing breakout zone at 1658, but I think it's difficult to make much of it. If we pop from here, we're going to hit a high volume area. And it looks easier to lose 1637, which could bring us to test the lows of the day before the session ended, which is 1623 or lower. Now, if you lose 1613, you're going to end up in the 15,980. You do have a lot of level supports. They're scattered, but you will lose volume support. So the bulls, arguably on the NQ, already lost volume support, and now it's become volume resistance above you. That's why I wouldn't argue for a positive outcome here, even though it looks like it could spike. Now, we have a few boxes that could be in control, and today they rested. Microsoft, for example. All right, let's see here. RTUI is pretty interesting because it was the green ticker of the day. Now, I'm going to zoom out to 15 minutes and brag a little bit. Actually, no. I wanted to tell you what happened. We've had these lines. I think I did these lines in the last video from the last update, and I just made it a stronger white line. I did not change it. And what happened? I said we would chop, dip, we had 2 dips, and then we had a rally, and we exceeded my target because the rally this morning was just freaking insane. And if you can see here, there were 2 ticks, 2 15-minute ticks that wanted to stop at the arrow. So they overdid it. So they may be out of steam. But now I have shorter term. On the downside, you do have volume support through 1798. Keep those numbers in mind. 1798. All right, so I added a few lines in the prior to recordings to show you the immediate triggers. So if I go long here, I'm guessing. If I go short, I'm guessing. Visually, to see, it seems like it's easier to lose the support than it is to plow through this level at 1809. Let me tell you why. 1809 was a hard bounce fought, lost, could not recover. The second approach, they will need something to punch through. And if they do, they're going to hit bigger sellers at 18, 13, 12, and 13. And here's the trade. If I wanted to go long, I go long here and I should profit quickly. If I wanted to short, I would go short if they go. So the first short opportunity is at 1809 with a stop. And the stop can be higher than here if you can take the pain because you want to write it down. Maybe you get this many points out of it. But if they get up to anywhere above 1811, I would then definitely start a short if I don't want to start it here. Then I'm guaranteed to do nothing if they don't get there, or get a decent short from here and to here. And then what happens here? If we lose 1803, that's the second arrow area, then we will probably get to 1798, 96. There are a lot of buyers down there, but they're level buyers, not volume buyers. So the bulls do not want to lose the area where they're at right now. First warning, DEFCON 3, as they say, 1804. The second warning is the low. You have one last ditch effort at somewhere around 1801, but it'll be then an easy trip to get the third arrow, which would be this. Anywhere below 1800, I would book it. I mean, that's a lot of points. All right, so CL, we have a story for crude. Crude. The big concern for me in crude, if you remember in the prior videos, is that it's lower lows, lower highs. Maybe we have a way out of it. Maybe lower lows, lower highs. It looks like it wants to bottom. The bottoming process should be a cup and not a V process, and this is a good way. We have higher lows developing, but we don't have higher highs yet. The first higher high that I would start trusting is 78.50. The second one would be much better, 79.80. So if you continue, if you lose 74.1 or 74 before you take out this easy ledge right there at 78.50, that's a big disappointment in my book, and then you're risking losing this guy, which is the must hold at 72.4. You lose that, I think you're going to the mid 60s in a series of lower lows and lower highs. I did also provide a small box if somebody's actively trading it, not for me. Those bumpers are for today's trade. In fact, before I started the first video, we were here and then we had some action. Now that's too thin action for me, but this is a 1 minute candle and depends. Different people are at different speeds. I would get long at the bottom end of this box at 77.20. I would get short or exit the longs at 78, the closer I am to 78. In fact, usually I would say 15% of this box and 15% of this box would be the edges of getting long, getting short, getting long, swing it. Now, I don't think they have it in them to lose 77.15, but if they do, the bottom end of the box, they will end up at another shelf of buyers at 76.60, I think. Above here, I really don't know what there is, nothing recent. So if they take out the box, the upper end of the box, they may get to 78.60. 80, the closer you are to 79 and 80, then the more sellers you have. Even though it's old, it'll still matter. Gold, okay, so I want to say leave it alone unless you know what the heck you're doing. But I'm going to give you the big picture and you trade it however you want. They had a contract roll gap up, which a lot of people missed, including myself. You have a couple of paths. Either the white path or the easy one would be the bulls to go bonk and beat the 2071. You take out 2071, I think you will have enough to take out this prior failure also at 2073, and you end up at 2090. That would be the target, I'm estimating. I don't have an official target because it's too old to look. So if there is anything, I can't remember now. I'm drawing a blank. But anyway, there's nothing intermediate here that could give me that. But why do I say that this is probably easier to do? The volume. If for whatever reason they hiccup, dollar spikes or whatever, they lose 2060, I think they can easily lose 2058 or even 56. Now, if you do that, you lose all volume control because of the gap. There is no transactions here, so it's easy to go. So I would start closing the shorts the closer I get to 2047. I'm not gap hunting, okay, because I don't understand this contract roll quite a bit. It just bothers me that they do crap like that. Why is this necessary? So you think that maybe you'd use the GLD as a guide, put it side by side. Okay, so this is the gold trade. The bulls are in charge, so easy to break out of here, and if they don't, I think they could snooze and get this done. Track the dollar as well. The dollar is not inversely related directly, but it does influence everything that's priced in dollar. Okay, I think I'm going to leave it here. 3x video. hopefully this helps. Don't forget to like and subscribe and hit the bell and comment. Let's discuss it in the comment.